Welcome to the risk events video for the week beginning the 3rd of August 2015. There are 3 key risk events that I'll be looking to trade this week. There's lots of data coming out, but the way that everything's panning out, the way the big picture is fitting in, there's only really 3 key things at the beginning of the week that I can see playing out here. Of course, you know, anything can happen as the data comes out, but there's 3 big ones. There's also another currency that we'll be keeping a close eye on as the week plays out. Now, first of all, we start with Monday the 3rd. Now, there's not a lot coming out on Monday. You know, we've got manufacturing PMI from the UK and the US. Those data points not really expected to do too much. There's a bank holiday in Canada. So the week's probably going to be a fairly quiet one, quiet start. Not really expecting too much, of course, unless anything unexpected happens. But the action is definitely coming later on. Now, if we move to Tuesday the 4th, we can see we've got some data from Australia. We've got retail sales, we've got trade balance, we've got the cash rate, and of course we've got the RBA rate statement. Now, we're actually expecting, or most of the analysts are expecting, the cash rate and the statement to be fairly unchanged. I guess it's probably classed as dovish as it is. If it is unchanged, it will be dovish, but because it's unchanged and it's nothing new, the market probably won't be looking to sell Aussie dollars too intensively. If the RBA do go more dovish, then of course we will get a sell-off on the Aussie dollar. But at the moment, with the way the situation's looking, you know, core inflation did kind of drop a little bit, but it's stabilising. It's not too far away from where the RBA want it to be, although it is going in the wrong direction. So for now, they're probably not going to panic. The Aussie dollar has lost a lot of value lately, which of course will help. So the general consensus is they'll probably sit on the sidelines and just kind of wait and see. So with that being said, there's not really much of a trading opportunity into this event. We've also got retail sales and trade balance. Generally, this data is expected to come out mixed. Again, not too bad. Not brilliant, but not too bad. So again, not really any trading opportunities. Retail sales, for example, expect to come in a little bit higher than it was previous. So because when we get a mixed picture, like the big picture's down and the data expectations are, you know, not too negative, it just doesn't really give us a very good trading opportunity. If all these expectations here were, you know, dovish RBA, really bad retail sales, really bad trade balance, then of course we could have a trade into this. But unfortunately, that's not the case. So even though our big picture view on Aussie dollar is down, we're not looking to sell into that data points. And we're not really expecting those data points to have much of an impact in terms of the Aussie dollar anyway. If anything, if the statement from the RBA isn't too dovish or is just exactly the same as it has been, could actually even get a rally on Australian dollar. But it's nothing we can really trade because it's very difficult to determine how long the rally will last. But it's just a possibility. So it's kind of one of those ones you want to just keep an eye on. If we do get dovish and negative stuff, then you want to get into selling it. But other than that, if it comes out as expected or in line, probably not too many opportunities there. Later in the session, we've got construction PMI from the UK. Most of the UK data is expected to come out better. It's not major data points, but it's enough sprinkling of data just to keep the pound supported into Thursday, which we'll talk about in a moment. But the first big risk event this week comes on late on Tuesday. We've got the GDT price index for New Zealand. We've also got from New Zealand, we've got employment change and unemployment rate, key employment data metric points for the country there. Now, why is this important? Well, milk futures prices last week dropped to about $1,500 per tonne. The last time GDT came out and showed an almost minus 11% decrease, the milk price futures were priced at just under $1,900 a tonne. So basically, the prices on the futures market have fallen again, which indicates that we could have another negative GDT. Not sure when. There's no official forecast, but if you keep your eye on the futures, it's a fair possibility that GDT could again come out in the negatives. And the employment data here is not looking too great either. Employment change is looking to be worse than it was previous. Unemployment rate, again, expected to come out worse than it was previous. The labour cost index isn't looking too bad, actually. But apart from that, the headline figures, the big, you know, market-moving headline figures, not looking too great from New Zealand, to be fair. So this is a nice collective, selection of data that we can trade into. Last week we had commodities falling. Commodity currencies got battered. New Zealand dollar, the big picture is negative overall. Market and the RBNZ want that New Zealand dollar US dollar to get down to under 65 cents. It's currently above 66 as the week opens or as Friday closes. So basically, going into this risk event, we could see weakness in the New Zealand dollar as the markets expect this stuff to be weak. It probably will come out weak and just add further pressure on the New Zealand dollar going into the week. So that's the first risk event you want to look to trade on the Kiwi going into that. Now, if we go to the next day, which of course is Wednesday the 5th of August, we have another... it's not a main risk event. It's not one of the risk events you want to trade, but it's kind of a precursor. You've probably guessed what it is. It's, of course, ADP non-farm employment change. Now, just before we get to that, we've got services PMI from the UK. Again, another sprinkling of data. It's expected to come out a little bit lower, but most of the other data points are expected to come out higher than previous, and the pound is well supported. So I don't really expect this to have any impact. And if it comes out better than 58.1, which is a fair chance it could do, given the environment, then, again, we could see a nice positive reaction on the pound. So all this data should keep the pound supported, in my view. Then we've got ADP and non-farm employment change. This is, of course, the private sector measurement. Over 200,000, 218. It's lower than previous, but the key psychological figure is 200,000. As long as ADPs and NFPs keep coming out over that 200,000 level, the Fed are good to go. Everyone's going to be happy with a hike. It's all looking rosy in the garden. So that's the main focus here. And I don't doubt that it will come over 200,000. We had, remember, jobless claims last week, a couple of weeks ago maybe, came out at 42-year, the best figure in 42 years for jobless claims. That's probably going to have a knock-on effect onto the next set of labour market data, which of course is NFP. So the expectation, of course, is we're going to get a pretty positive reading from there. So that's the first precursor. Now, we've also got trade balance and ISM manufacturing PMI, but because we've got NFP on Friday, these data points, unless they're like horrific, I don't really expect too much impact because everyone's going to be watching the big NFP, basically. No one really cares about, no one's really going to give, two hoots about trade balance when you've got NFP coming out 2 days later. That's what the market's waiting for. That's what the Fed are going to be watching. So no one really cares about these data points here. We also have a little bit of data from Canada trade balance as well. Just a quick note on Canada. GDP came out into contractionary territory last week. Negative on Friday. It was expected flat, came out negative. More bad data from Canada. Fits in with the bigger picture. We could look to sell Canadian dollar through the week on any rallies that occur. So if the Canadian dollar rallies against any currencies, maybe look to sell those rallies because the situation in Canada is not looking too great at all. And there's no data this week on the slate that could particularly show any kind of positivity to pick that up, basically. The big data points, think inflation, think GDP, they're coming out bad. Bank of Canada's cutting rates. The minor data points due out this week aren't going to change that. So we want to look to sell Canadian dollar on any rallies that occur. Dollar CAD, the only problem is dollar CAD, pound CAD, they're at multi-year highs at the moment, those pairs. The CAD has sold off really strongly, especially as commodity, the commodities are getting battered as well. So it's difficult, but I would wait for, maybe on those pairs for the pullback. If the Canadian dollar does rally and we get the pullbacks on those pairs, you can buy into the dips. But that's what you want to be doing. But there is opportunities there to sell Canadian dollar because of what's going on. And that's just another currency, like an extra floating kind of currency to keep your eye on through the week. So if we go to Thursday the 6th, this is where things start to get interesting. Now, Aussie data, we've got a nice week's big picture on Aussie dollar. Unfortunately, most of the data this week is expected to come out fairly positive. We've got employment change, unemployment rate. Unemployment rate is expected to tick a little bit higher, which is bad. Employment change is expected to be much more positive than it was previously. Again, it's mixed. It's generally not too negative, so it's not tradable. It's a shame because if we're going to expect really bad employment data and a really dovish RBA, we could have had a nice little sell opportunity on the Aussie dollar, but unfortunately, it's not clear enough. Then we've got UK manufacturing production. Again, expected to come out better than previous, positive. More reasons to support the pound. But the second big risk event of the week is the Bank of England inflation report. This will be where they give out their forecast for inflation. This is all about what they're going to do with rates. How is the recent budget from the new Conservative Party in the UK? How will that budget impact the Bank of England policies? As far as the Bank of England have been speaking, not a lot, basically. They're still going to hike around the end of the year, beginning of 2016. Now, the big thing is, if you look at the votes here, we're expecting 2 of the bank members to start deviating and voting for a hike. So the market is now expecting the BOE to start really seriously debating when to hike their rate, and it's only August, so the pressure is going to mount into the end of the year. The bank rate isn't expected to change just yet, but we do expect some of the members, Wheel and McCafferty, I think the ones that are going to do it, to vote for the hike. And this is going to be interesting, and this is, of course, going to be supported for the pound, because if we get that vote, and the inflation report is pretty hawkish, and we've got Carney speaking later on, there's no reason to expect those things to be anything other than hawkish and supportive for the pound. So basically, the second big risk event is you want to be buying the pound into that inflation report and bank rate votes on Thursday, because it's probably going to be something that's going to be very well supported. So if we get the problem with is the pound pairs are very hot at the highs at the moment. If we get some pullbacks on the pound, you really want to take advantage of those before Thursday. Get in and try and look for opportunities to buy into the pound into that inflation report for the UK. That's the second biggest risk event. And then, of course, we've got unemployment claims from the US. But again, because it's so regular, not too much of a big data point. And again, because we've got the big one coming up on Friday, no one really cares about that. And that leads us nicely into the third big risk event of the week, which, of course, is NFP. We'll talk about that in a moment. First of all, we've got the RBA monetary policy statement. Again, not really expecting too much from this. I think it's going to be kind of as you were from the RBA for the time being, but that could change if the economic situation deteriorates. But in terms of this week, not really any trading opportunities I'm expecting. Monetary policy statement from Japan, Bank of Japan press conference possibly. Will they add to their QE? I think sometime between March 2015 and October 2015 could be it. We're in August. There's a chance at any of these meetings the Bank of Japan could add to their QE program. But the Bank of Japan last week kind of invented a new inflation kind of reading. They basically brought out a different way of measuring inflation, which conveniently supports the case that their monetary policy is actually having the desired effect and everything's looking rosy in the garden. Unfortunately, the official measurements are showing the opposite. Inflation's basically flat. It's not going anywhere. The analysts are saying that the Bank of Japan need to do more. The Bank of Japan are saying, get off our backs. We think it's going to work out, etc., etc. But then they've pulled out this new, newfangled way of calculating CPI. It's not going down very well with the economists. The markets kind of, the Bank of Japan's losing a little bit of credibility with the markets on that. It'll be interesting to see how long they try and stick to their guns on that one. Or is it a sideshow so that they can pull out QQQE3 and have a bigger impact? Because if no one's expecting it, it will have a massive, much bigger impact on the markets. And, of course, a much bigger impact on the data, inflation and stuff like that. So, that's the question. So any one of these meetings could produce big moves on Japanese yen if the Bank of Japan pull, an extra round of QE from up their sleeves. It happens. Last October they did it. No one was expecting it. So it'll be very interesting to see how this one plays out. And as for that reason, it's just worth watching these, keeping a very close eye on them. If we get it, you want to sell Japanese yen, you want to get in the yen pairs, you want to buy them, you just want to get in, basically, because they're going to probably motor for at least the rest of the week, going into next week, next few sessions. So that's one to keep an eye on, but it's not a main risk event because I'm not really expecting anything to happen there, but it's just worth mentioning for you to keep an eye on. The big one, of course, is NFP and average hourly earnings from the US. NFP is expected to come out 224. Average earnings 0.2, both better than previous, both pretty positive. Both, of course, will support the US dollar if they come out in line or better. And there's a very strong expectation that will come out at least in line because of all the other data points we've had recently. So again, that's the third one. You'll be buying dollars into this risk event. Again, obviously, you want to have stops in place. You don't want to, just risk your money willy-nilly. But it's a very good risk event to be buying dollars into. Towards the end of the week. We've got Canadian data as well. Building permits, employment change. Unfortunately, not unfortunately for Canada, but unfortunately for us as traders, these data points are generally expected pretty positive versus the negative situation we have in Canada. So again, not really tradable. It's going to be a tricky one to trade into. If we get negative deviations, then you can maybe look to sell Canadian dollar, but certainly not going into it. So basically, we want to see just NFP and average earnings. Just all we've got to do is literally just come out as expected. That's all we need to keep the Fed, or to keep the market excited about the possibility of the Fed hiking in September. That's what we want to look for. So that's pretty much it. 3 key risk events this week. We want to look at the New Zealand data points coming out late on Tuesday. We want to look for the inflation report coming from the UK. And then, of course, finally, NFP and average hourly earnings from the US on Friday. You want to buy, sell New Zealand dollar into that one, buy the pound and buy the dollar into those risk events. That's probably the best trades of the week so far. And of course, if you see anything else on the feeds, keep your eye on the news feeds, because if anything unexpected happens, of course, that will be good trade opportunities too. And there's always a handful of things that happen through the week to give us some nice easy pips on those feeds. So keep your eyes glued. But generally, for the big picture view, they're the 3 risk events we're looking at. And that's how we're looking to trade it. So hopefully we can all use that information and grab some pips out of the market through the coming week.